One with the echo.
You were?
Okay,
All
so
right.
it's not me. Things are working okay. Okay, so
All right.
we're looking for support areas, and right now the bottom of this bar, the bottom of that bar, the bottom of this bar, and you can see there's a little bit of a difference there. Not a lot, but it's an area. There's a crossover, and that's what we're looking for. There's no crossover. There's nothing to do. There's a crossover. Okay, 2 out of 3 in our direction. 1, 2, yeah. Setup bar. Where are we getting at? At the low or the close of the bar. That close is 139.17. Now, do we take this trade or not? Where's the price target at? Price target is down here. Sell target is 138 even. That's already below the previous support areas. However, the bar itself pierced through the support area. You see where that is? Here's the support area.
Yep.
Okay. And the low of that bar is 138.22. We're on a 0.067 30-year bond chart. So if you've got your trade nav open, you can follow along on that directly. But there's the low, and it went through the support area. I feel okay taking that trade because I got the crossover, 2 out of 3 in my direction. The low of the bar went through the support area, and if we take that as support right there and that we went through it, the next possible area is there from these 2 or 3. We're there. With the low, the close, or actually the open on that bar on 518. The open there, and the close there, all hanging out. I got all these. I don't have numbers on my side, but that's where that happens to be. Let me see if I can move you guys someplace else. Sorry. There we go. Oh, you're down at the bottom. It's easier. Okay. So we're back here. That's the trade setup bar. Crossover right there. Target price 138 even. The support area we're looking at is basically right in here. Is that good, everybody?
Yeah, that's okay. What I would call support.
All right, so that's happy. So we got support area, not a big deal. Okay. Now, price target is already below where we wanted to go. The bar went through the support area. I'll take that. The next area of concern would be somewhere in here, 137. But let's see what happened. So we took that trade on 531. He didn't get hit. 1, 2, 3, 4 days out before he got hit. Is that believable for everybody?
Yeah.
Okay.
Yep.
So that's happy. You got hit 4 days out.
Now, after the third day, would you have put in an order to sell just because 3 days had went by and you didn't get a hit?
By the time I was there, okay, it already got hit.
Okay.
But you can believe I'm looking.
Right.
I don't like being in trades that long anymore.
Right. Exactly.
I used to be in trades that long. I didn't sleep well. I sleep really well now because I know what's going to happen ahead of time. So, yes, 1, 2 days. Again, setup bar, entry, day 1, day 2,
Okay.
day 3 was actually hit on day 3.
Okay.
Do we take consecutive trade from there?
I wouldn't, because there's so many gone, so many, like 1, 2, 3, 4, 5 days already
Look
gone.
at that man counting those bars. Very impressive.
Yeah.
Smart guy. You count the bars. Okay. Swing high is there. 1, 2, 3, 4, 5 days. He knows 5 to 7 days, 7 to 10 days, something's going to happen.
Right.
Okay. Do we take that? This was still looking okay. Okay. The reason it looked okay is that right underneath, ADX and DMI are still good. I got a reasonable downtrend here. We go to a weekly. And I can't see where I'm at because I got you guys moving here. How do I move your bar again? I moved the whole thing. Sorry about that. Okay, and we are at 4 or 5. Where were we at on that?
6-3.
531 or
531. Okay,
31, or
531.
actually, then what? Yeah, 6-2.
6-2. Okay. Let me
Yeah,
go back here
6-3.
on a weekly. 4 or 5. 6. Look at the weekly on 6-3. We're finishing the downtrend. What happens afterwards? Sideways motion,
Mm-hmm.
and then it continues. Okay, well, I don't know it continued yet because I didn't get there, but I'm in sideways motion at this point in time. So this is still looking okay, and the weekly DMI, we're still happy. So we go back to the daily because that's what we're trading. And that's the one that we're questioning right now. Okay.
Hey, it did hit, but you're taking a chance, aren't you?
Look, it hit the next day.
Yeah, it did.
It hit the next day. Now, do I go another one? We never take the third trade. We never take the third trade, and this is why. What happens when you take the third trade? Go sideways
Sideways.
for 4 bars.
Mm-hmm.
What a surprise.
Now I'm forward testing, and when you get to 612, I just took that trade.
6, 12,
One more.
610.
Right. Well,
12.
613. I did it the Sunday. I was looking at it.
All right.
So I took that. I think. Let me see. Or it was the one before. It was the one before that. I think. Yeah, it was the 10th.
610 I took.
Yeah.
610 I took.
Yeah. I took that one short.
Okay. Then you take consecutive trade on that?
No, I just did one.
No.
I left
Okay.
it alone.
Why?
It was such a downward trend if you go all the way back.
It's a nice downtrend, but look at that
took
big
it
bar.
because the bar, everything else looked really great.
Everything else looks fine for a consecutive trade, except
Right.
that bar was way too large to be really comfy.
All right. It was it was like the bears were pushing down, but everybody, it was just too far.
And where's
So
the
I was
price
like-
target out on that?
Right.
I don't see anything. I mean, I'm hitting new lows here. And this is 131. Let's look at weekly. $610, 130.
Yeah.
131 is where I'm hitting at.
Uncharted territory.
Gets me nervous.
Yeah, because I had 135.22 and then out on the 13th at 134.10.
So Dr. Fred, are you saying, just to restate, that large bar is what makes you a little increasing your worry?
Well, you get a large bar, and how far is it out? 1, 2, 3, 4, 5, 6. 3 days over. 1, 2, 3, 4 days over, continuing down. Okay. That's pretty far off from the swing high. And I understand we have a little sideways action here, which is a little pause, which is lovely. Okay. But I didn't have the nerve enough to take that bar as a setup bar. And again, I've been doing this for a while now. And lo and behold, because I've got history with corn and 30-year bonds, I know in the past it hasn't worked out for me. That's why you backtest your two commodities. Now, you put me on a Dow chart, I have no idea what the hell's going on over here. I have no idea. I don't trade the Dow. I know it's ugly. Okay, and it's lost money the entire year so far. On a $5,000 account, this is taken on this day. Where the hell are we at here? 115 bars out. That was a $6,000 loss on a $5,000 account. Right there. I don't sleep well like that. But bonds, no problem. I sleep really well.
Dr. Fred, what about on the long on the 623,
620.
23rd? You have the crossover, and then you go, you have that. It looked like everything was kind of set up, but I don't know if, the resistance was there or what was happening on that, because I went, on my simulated, I went long on that, and it didn't work out.
Okay, well, if you got the crossover, well, you can't take 622.
Mm-hmm.
You have 2 out of 3 in your direction.
Right.
623, you got 2 out of 3 in your direction. Okay, but this is an overall downtrend. You go back to the weekly, it's a downtrend. Everything else looks happy, but that's your swing high. You're counting the bars and you're coming down. It's a downtrend, downtrend. Remember, you get sideways motion here. Swing high, count the bars down. Sideways motion, continued down. Swing low. We're going sideways now.
Hmm. So then you got the congestion right
Price
there.
target's way up there.
Yeah.
Mm-hmm.
Right there is where I'm going to call resistance.
Well,
So that's what you would call the resistance.
I
in there,
call
'cause-
resistance right around there.
Okay, because I was looking at the
There.
top one, at the higher one.
And so you've got a number of spots that you can call resistance. And I'm not going to trend, this is counter trend.
Mm-hmm.
There's always another trade. Now here we are in end of June, and how many trades have I got posted so far? 14 on bonds and 11 on corn or something like that. So there's enough trades there. I don't have to be overtly aggressive. I'm not desperate for a trade. And that's the whole routine here. You're not desperate for a trade. It's always another trade. So if you don't take one, that's okay. You sleep well with your cash. But yeah, there's a crossover there. And if you guys didn't finish the program, you say, well, the program said crossover, 2 out of 3 in your direction, you take the trade. And if you're doing a back test, yeah, you take the trade on a back test. And you find out that one got stopped out the following day. And you make a note of that and you look at that. Why did it get stopped out? Why should you not have taken that trade? Resistance could be there. Resistance could be there. Resistance could be there. Either way, for what is happening, that's a stretch to try and get to that price target.
That's a long way.
Yeah, and that's, where's the price target at? What are the odds of hitting that price target? Even
Well,
though everything else says it's happy.
So when you talk about what price is doing, that's like one of it there. So it's so far away. It's like that's a stretch to try to hit.
That's a stretch to try and hit. Okay.
Okay.
And lo and behold, you can get in, and you would have got stopped out on the second day. And I hate giving money away. There's no reason for it. That's why you backtest the hell out of your two commodities. You can't be a trader. You can't trade everything. There's 20 of them. Okay? There's more than that, but there's 20 that we would routinely trade. But here you are. You can't trade them all. And there are a number of people that if you're not there yet, you will be at some point in time when you start looking at other programs. And they all sound wonderful. And when you start looking at the other programs, you'll see the focus is not on getting out. The focus is on getting in. Their entire focus on most every other program I've ever seen is how many trade entries do you get? How many setups do you get? I don't care. This program is designed to keep you out of as many bad trades as possible, not to get you into the good trades. If you have money and you're sitting off to the side, the good trades will appear. And every one of you has seen good trades show up in your two commodities. Now, whether you took them or not is a different story. But when you backtest them, you prove to yourself, oh yeah, that was a good trade. This is why it was a good trade. These conditions were met, support and resistance were good. I counted the bars, everything's happy. It was a good trade. But if you have enough money, you can hang in there long enough to wait for the good trades. Every one of you went through a 9-week program. One miserable PDF a week. Drove people crazy.
Some of us went twice.
Okay. Why does it take so long? Why can't I get it faster? Why can't I do it more? This is why. You have to develop the patience to wait for the trades. And sometimes, even when you're waiting, where's my corn at? Okay. Look at this area here. Where are we at here? Let me slide this.
Corn.
Here we go. From April, May, and June. No trades really. No happy trades in there. You have to wait for the good trades.
That's true.
You have to wait. It's a patience thing. And if you don't need the money, that's a great time to trade when you don't need the money. Because if you need the money, and that's why we do calls. I don't let everybody into the program. You guys are into the program. We'll have to call ahead of time. And on the call, not one of you seemed desperate. If you didn't trade, you couldn't pay the utility bill that month. No, not one of you were in that category. That's why I do the calls that way. I want to know who I'm letting into the program. If they're desperate, I'm not going to let them in the program. Their head's not going to be right. You can't trade. You see things that aren't there. Now, you've all been through the program, and the idea is to sit back and wait for it. And sometimes you wait a month and there's no trades, and there's something going on. No, it's just the way it is. That's why we backtest it for a year ahead of time, so that you get the feel for what's going on with your two commodities, how often they trade, what the chart patterns look like, how many winning trades, how many losing trades. But when you backtest them, the first thing you do, crossover, 2 out of 3 in your direction, you put the trade on. Always put all those trades on, and then go back and look. Which ones were bad? Why were they bad? And you go back and you look, and you find out. Support and resistance, too far from the swing high or swing low. Did they go in that sideways motion? That happens. And if you take an overview of your two commodities, you'll be able to see it happening. And after a while, they jump out at you. Sideways motion, sideways, and a slight downtrend here. sideways motion, uptrend just a couple days, sideways, downtrend, couple days, going sideways now. Happens with every chart, every commodity. The numbers change, the market doesn't change. Markets go up, they go down, they go sideways. That is it. And when you're doing a bar count from the swing high to swing low, which is all covered in pretty much the second lesson, first or second lesson, we did swing high and swing low. It's exceptionally simple. It's exceptionally critical. All the advanced traders, and you talk about any other trading program, you start looking at, I mean, you will eventually, they hardly ever mention it. It exists, and they just blow it off. And they go for their indicators. And their indicators are going to tell them everything that they need to know. It's all bullshit. What tells you what you need to know is the price action. We always look at price first. Everything else is secondary. All your indicators, every one of them, is developed from the price data. Open, high, low, and close. Every indicator is a reflection of those. They manipulate those data points. And the more indicators you have, the less you start looking at the prices, and the more you start playing with the indicators. And you can get the same indicator, and I can change the settings on it, and it can tell me two different things. Completely different things by changing the settings on the indicators. And that's why I don't look at the indicators. This is really a simple moving average. Why did I go with a simple moving average? It's clean. It doesn't lie to you. Why did I pick these particular days on this moving average? Because I tested them over a 10-year period. This was the one that was the most reactive. They got me in as close as possible to the swing high and the swing low. I could adjust the settings on these, and it would follow it closer, but then it doesn't tell you anything. I could open the settings up and do like the stock people do. Well, you have a 50-day moving average and 200-day moving average. Well, that's great. That's a lot of dollars at risk. It's a lot of dollars at risk. This is a much simpler system. It's not there to make you rich overnight. It will make you rich over time, and it will give you consistent cash flow because you get to control everything. I wish it was more complicated, and I could show you how smart I am, but I'm not, and it's not. It's a really simple program. Swing high and swing low, crossover, 2 out of 3 in your direction, count the bars. Did I miss anybody or anything?
Dr. Fred, to dummy this right down, with your crosshairs, when you're horizontally measuring support and resistance, you are not measuring the shadow of the candle. You are measuring either the open or the close of the candle. Is that correct?
The body itself, yes.
It's the body itself. So can we extrapolate that out to say that support and resistance are broken only when there is close?
No.
And it's not the shadow not when the shadow breaks through?
No.
Okay.
I'll take a break. I'll take a break through in the shadow. If the shadow breaks through, that's fine. I don't have a problem with that. But support and resistance are pretty much defined by the bodies.
Gotcha. Thank you.
Are we okay with that?
I think what I've learned is to use my crosshairs more. It makes it actually very simple in doing that.
Well, it's a nice program. I've been using it for years and years and years, and some people are still using the other one, NinjaTrader, but I gave up on it. Didn't like it, but it was free, and so people could play with that. That's okay. But now I know if somebody's in a program, get Trade Navigator, their goals is fine. Their free thing is sucky. The goal one works out fine for $500, and you get it for life. You get it for life. They update you for life. And all you gotta do is get the data.
Hey, Dr. Fred, can you speak to entries on the days that there are gaps between where your entry point should be? Some days it gaps way down or way up. how do you address that?
Okay. You have your trade nav up?
I'm a Ninja Trader guy. I don't.
Okay. Pull it up.
Okay.
Pull it up and show me what you're talking about. Let's take a peek at it. I'm going to stop my share.
All right, it's firing up here.
Okay.
Okay, let's share here. Okay, I'm in a bunch of back testing, and right now I'm back testing live cattle, for example.
All right. Just show me your gaps that you're talking about.
Well, I don't see an example of one. Well, here's an example. This wouldn't be a setup though, but like assuming there was a valid setup over here in 2 or 3 in our direction, and say this was entry, and then all of a sudden you don't get an
Can you share your
opportunity.
screen?
Buddy, we don't see it.
Oh,
Yeah, we can't see the screen.
oh, sorry. How about that? Is that sharing now?
Oh,
Yeah.
yeah.
Okay. So
Okay.
yeah, so this is not a valid entry, obviously, but let's say that the crossover occurred back here, and now we're looking at this bar for an entry, and the entry point is, right there. That's the price you want to enter at, but all of a sudden the next day, the thing opens here. It's such a gap, and
You don't get every trade. That's all.
yeah.
You don't get every trade.
Yeah.
Okay. And that's why I wanted to see your screen because, okay. Your screen obviously looks a whole lot different than my screen.
Yeah.
Yeah, no crosshair.
Okay.
Well,
Outside of the data window,
Yeah, I can do
you got a third pane open down here. I don't know what it's doing, but it's taking up space. Okay. I don't know what the dots are that far out.
That's a swing high, swing low indicator sort of thing that Ninja Trader gives you. You can turn those.
You can give it back to them, yeah. Okay. Because that's you end up with stuff on your chart that you don't need. Okay. And all it does is divert you. You got a channel going on there. You got an upper and lower channel.
So let's see. I've got a Bollinger on there. I'm gonna remove
How about that?
it. Yeah. I'll take a
lot of stuff on there.
Yeah, in the swing indicator.
Oh, that's a lot of stuff.
I have to say, I like my swing indicator. I'm a Ninja Trader too for a life license, and I do reference the swing indicator.
The swing stuff for swing high and swing low is cute, but again, you can get it to do whatever you want. Trade Nav's got one also, and you'll see it on my charts occasionally. Whatever the default setting was, I let it run. I don't look at it. I just, it's there. But this is, a better looking chart. Not enough bars on here, obviously. So you can't tell what's going on here. Need more bars right in there. It's good. Okay. Yeah, somewhere in there is happy, so you can see what's going on.
Yeah. So on a gap trade, you're just saying that's just not a trade. If you can't get in at your preferred entry point or right around there, you just pass.
Pass it. Yep.
Okay. Fair enough. Thank you.
Most of the time, if you haven't noticed, the day that you're going to get in, I don't know if you can see you probably can't see my on your chart you were just looking at. Okay. Can you bring your chart back up, buddy?
Well, it's ironic. That's the same question that I asked you when we were on our call a couple of weeks ago.
Okay. So next to the last that crossover, which is 1, 2, 3, 4, 5, 6 bars up here, right there. Next one, right there. That crossover. Okay. Now, if you ever look, the close of that is going to be your entry point. Okay. If you ever notice, whenever you have an entry, your setup bar, the following bar, the next day, it will generally retrace at least a third of your setup bar. Almost every bar you have retraces almost a third of the previous day's bar. Does that make sense?
Mm-hmm.
Sometimes it doesn't, but most of the time you're going at least a third of the bar on a retrace. So you really increase your chances of getting in.
So it opened higher, went way higher, and then starts to come down. And you're saying you would get in on this bar? You would?
You can still get in on it, yeah.
Yeah. Okay. Well, I don't know if the 80X is above, probably not above 22 here. It doesn't look like it, but if everything else was right.
Everything else is happy, yeah.
Okay. That's very helpful.
So you don't have to worry about, getting in on every trade. You're going to miss a couple trades. No big deal. As long as you're not losing money, it's okay.
The other question I had was, a lot of these trends that we see on these things are very, very long lately. And how many days after a setup bar is it till it's just not valid anymore? You see these things where they go sideways and there's a lot of consolidation for a long period of time. Is there any
Swing high to swing low?
Yeah.
Talking 7 to 10 bars.
Okay.
Swing high, swing low, 7 to 10 bars. And on an extended run, and you've got an extended run there, look at the bars. All the way at the top, keep going right there. Swing high. Okay. One of those bars is swing high.
Yeah.
Gap down open. 1, 2, 3, 4, 5. Go sideways. 1, 2, 3, 4. It starts down again. 1, 2, 3, 4, 5, 6, 7, 8, almost 9, maybe 10, before it goes sideways again.
11.
Okay? So look how far you were from the crossover.
Yeah.
But
Well, we-
every 7 to 10, something's happened, go sideways. Now, you get all the Fibonacci people, and there was something else. Gann fan, that type of shit. Drove me crazy for a while. They're very good at projecting an area where something's going to happen. Elliott wave people, those are the ones. Those are the ones. Yeah, they project price and they project time, and they project an area where things are going to happen in this price zone and this time zone. Well, that's really nice to know. But how the hell do you trade that? I can't trade. Well, when it gets to this area, get me in. When it gets to this area, get me out. When it gets to this time frame, get me in. When it gets to this time frame, get me out. No, you can't put orders in like that. But the Elliott wave people, and I had specific charting for this stuff. It wasn't Elliott wave. It was similar to that. Same type of things. I forget the guy's name. He had his own software, and they line them up, and they get crosses, and somewhere in this area, something's going to happen. Well, it's all great after the fact, but I can't trade it ahead of time. This is really simple. You got a simple crossover system. You got a moving average crossover. It's well defined. Either it crosses over or it doesn't cross over. Swing high and swing low, also relatively easy to identify. You can see right now, 7 to 10 bars from a swing high to a swing low, and you're going to get some type of sideways activity. You know that's going to happen. And now you know when you back test what to look for, and when those things happen, when you don't take a trade because I'm too far out now. 7 bars out, and I got a giant candle. Okay, this might not be a good trade to take. You don't know that until you back test the hell out of it, though. But you back test your commodity for the preceding year. Doing 2 years ago doesn't help you much. If you're going to put all the effort in, it takes some time to back test your system. But you put that kind of effort in, you want to make certain you get current data that you can use to help give you some type of idea of what could happen in the current year. Will that make sense?
Does make sense to me.
Yes.
Yep.
Any questions I could answer for you before I run away?
That's good.
Keep me up past my bedtime.
This is great.
Dr. Fred, I got a quick one.
People laughing at me. I'm an old guy now.
Get another glass of wine, Doc.
Not tonight. I'll fall asleep quickly.
Dr. Fred, you got time for one more?
I'm here.
I had a question. My name's Jim Breed from Iowa. The end of day trade setup information off the window we're looking at. How does the after hours session impact that? So I guess, what do you think is a better strategy around the timing of entering the trade, taking into consideration the after hour session?
Okay. I'm not all that concerned. What happens is you're looking at this stuff after 7 o'clock generally, after 7 o'clock Eastern. That's when TradeNav downloads stuff.
Okay.
You put your orders in based on what you have. They get transmitted over to your broker. They sit in a broker's computer until they execute, or they don't. And that's what the big thing was with TradeNav pushing their streaming data. I don't need it. I'm not going live. It's okay. I'm looking at end-of-day stuff, and I put the order in, and it's just in a broker server. And they'll combine all the data and give you the data for the day, with the day sessions and the night sessions. Where they cut it off, I don't particularly know. Depends on the commodities.
Right.
But you can pull up your data and just have your day session data if you wanted to.
I guess the concern is if, we entered the trade and then went to bed, and then, overnight during that session, the trade got closed out, say it was going in the direction we wanted to go, it closed out. The question would be is the same information still valid for a trade entry for the day session? In the instance that might happen.
If your trade closed out, that means either you got filled or you got stopped out.
Right.
Then you're out of the trade one way or the other. It doesn't matter. That make sense?
It does. I was
So I
just
put in the 3 orders.
thinking if the same parameters would still apply for the actual day session in the rare.
It doesn't matter. You're already out. Either you got
Okay,
stopped out.
For a second entry, I guess is what I'm trying to say.
Would you get back in? Yeah.
At
Okay.
the same, using the same setup as the previous day.
You look at the data at the end of the day again. You got
Okay.
Monday was your setup bar. You got in on Tuesday. You got out on Tuesday. Okay. Come back at 7 o'clock at night. Okay. Is Tuesday now a valid setup bar for a Wednesday entry? So you don't have to go crazy about what they're doing in the middle of the night.
No, I guess what I was confused about was, were we able to have trades filled after hours? You know what I'm saying?
They're going to sit in your broker server and they're going to execute
Okay.
when the prices are hit.
Dr. Fred, this is Rich. I want to build on Jim's question. When I was talking to the Trade Navigator folks in the sample for the order, I'm just still doing the simulated trades. They said when you're putting in the order on the video, it says good to close, but they said in Trade Navigator to put it for a day trade for the order. And I was noticing on some of the simulated that if I put it in like on a Friday, it was closing out
How about
like on
that?
the Saturday. It wouldn't go until Monday, if that
Yeah.
makes sense.
Yeah. So that's why I'm not worried about the simulator. That's why we do all these trades manually on the forward and the back testing.
Okay.
Once you're tied in with your broker, then you ask your broker how that works. And that's when you do an actual electronic simulation, when you're tied into a broker's account.
Gotcha. Okay.
And I think the question, and correct me if I'm wrong, is that we trade on good till close. Is that not correct, Doctor?
Correct, good till cancel.
Right, so it's not a one-day trade.
No, no,
It's good till
till cancel.
canceled, correct.
Okay.
And we're also, and I'm sure Trade Navigator, Ninja Trader, we're also using one cancels other.
Yep.
Yeah.
So that, so it's done,
So you always have the 3 orders when you go in.
right?
Entry order, okay, you get in on the stop, and then your price target and your stop, good to cancel, OCO.
Okay, so just to kind of go, so it's a stop, then a limit, then a stop, and then if you're going short, it would be
Still same.
a
Same thing.
sell, buy, and if you're going long, it would be buy, sell. Does that make sense?
Correct.
Okay, cool.
So you always put your stop order in. Okay, you're going to buy on the stop,
Mhm.
either long or short. You're getting in on the stop. Okay, at this specific price. And then your next order, which is 2, is your price target and your stop, and their OCO.
Gotcha, thank you.
Is that good?
Yep. This is more mechanics with the trade than it is your
Yes.
system, but I'm
Yes.
just trying to make sure I'm understanding that part of it.
The biggest part is to make sure you get the system down. The mechanics will work out later on.
Mhm.
As long as you're back testing and forward testing, and you're getting 80% of the back test and at least 70% of the forward test, then you can work the mechanics out with the brokers.
Mhm.
But you see what I'm doing right now. I think the last time I checked, it was at 90% winning trades going forward this year. I've been doing it longer than you guys, obviously, but again, I'm not a genius. I'm just using the same system that you got.
Mm.
So the only difference between me and you is that I've been doing it longer. Are we good now?
Can I ask just a quick question, just use your brain one time? What about, what specific candle formations do you look at? I know that you don't use a lot, but
Almost none of them.
hangman, any of that?
Almost none of them.
You use none of them?
Almost
Okay.
none of them.
You
They're
told me
there.
you used 3.
They're
Okay.
nice. Okay. The only things I'm really all that concerned with is a doji and a spinning top. We don't get in on dojis. Spinning tops, maybe.
Yeah.
We never get in on dojis. Dojis never set up bar. The rest of those things are very nice. And again, what were they designed to do? What are they trying to tell you? They're trying to tell you where bottom is,
Mm-hmm.
where turn is, right? It's
Yeah.
the only thing they're trying to tell you. When these things happen and we're at the end of the run, it could mean that the market's going to turn around the other direction. Is there any other reason for those candle formations? They're pretty much it?
Yeah.
Okay. And
Yeah.
if we're looking at swing high and swing low and a crossover, doesn't that tell us everything we need to know at that point?
Gotcha.
I mean, there's a guy somewhere, there's a couple of them actually, but one of them's got dramatic course on candlesticks. And you went through my program and you saw what happened with the indicators. And a lot of people got lost in the indicator in the indicator section. A lot of people really got lost in there. And I try to tell everybody ahead of time, it's all background. Okay, don't worry about it. I just needed to show you that these things exist. Well, if you tried understanding each one of those indicators, you'd go crazy. Unless you're some type of math geek or something or other, and I'm not. Okay, you'd go crazy in that stuff. And unless you're some type of candle freak, you can go crazy in that stuff because they all use different names, and depending on who you're talking to, they name them different things. But the purpose of the candles is to let you know what the market is thinking to some degree. And all I'm concerned with is it turning or not? Swing high and swing low are your crossovers. Again, the crossovers is designed to get you in as close as possible to swing high or swing low. Generally, it's within 2, 3, sometimes 4 bars. Sorry, that happens occasionally. But most of the time, within 2 or 3 bars from a swing high or swing low. Now, you can go back and you can come up with all the fancy names for the candle formations, and they're nice. But they're only trying to tell you that the market's going to turn. The system does that for you already. Swing high and swing low, and you count the bars out, and you pretty much know what's happening. And if you go into deep into the candlestick formation stuff, they all tell you that they're sort of useless without some type of Western indicator. The Western indicator we use is support and resistance. And those candle formations are really interesting. And they tell you that this is true if it's at the bottom of a trend. Well, if it's at the bottom of the trend, what the hell is it telling me? I already know it's the bottom of the trend because I got to swing higher or swing low over there. What happens if I have that same candle formation and it's going sideways now? Does it not mean the same thing? No, it doesn't. So they're there. Again, it took me 10 years to come up with the course. And I wanted to make certain that it had everything in there that someone would need, from zero knowledge to advanced trader, that you'd be able to go through the course and use the information. It would make sense. I try to do that. I know there are spelling errors all over the place. I know they exist. Okay. The language it might not be pretty either because it's not written for a book. It's just me talking. And if you've heard me talk for a while, yeah, it's Dr. Face. That's just him. Okay. I'm not trying to be fancy. I'm not. Okay. And the course is just me talking. But I don't try to impress anybody in the course. I don't think anybody was impressed. Not one of you have been, worshiping me, which is novel. I don't remember anybody, offering up their firstborn or anything. I don't want them anyway. Okay. But, the course is the course. It's simple, but I had to include everything because I didn't want you from day one going outside of the course and get tied up with other trash. And there's a lot of other trash out there. And some of you will start looking, others will look eventually because you'll start making money with it. And then you'll find, well, it's a little slow and maybe I can do something better. Or, yeah, Dr. Fred, they made sense, but I think if I do this, I knew those things are going to happen. They happen every trader. Every trader at some point in time says, I know how to do this now. I can do this on my own. I can do it better. Okay, no problem. Do it better. But when you end up losing money, and a couple of people have already, done this, they've taken the course, they made money, and then they went off on their own, started doing different things, and then they came back to the course again. The basics always work. This is not a fancy course. It really isn't. Swing high and swing low, support and resistance. Okay, count the bars. It's no more complicated than that. It really isn't. Was everybody
Okay.
good for the evening now?
So there's the old saying, keep it simple, stupid, right?
That would be me. Long time.
If you want to make more money, just trade more contracts.
You can do up to 5. Up to 5. After 5, the fills are different. They don't come back the same way. Now, if you're not happy at $250 a year, and eventually you get bored, I promise you, you will eventually get bored at making $250,000 a year, 20 minutes a day. You will. And you won't need the money. You just need something else to do. At that point in time, just so you're mentally stimulated, you go out and you find yourself 2 new commodities. You find 2 more, another pair, and you do the same thing with them. You back test the hell out of them for a year. You forward test them for 90 days, and then you go live with them 1 contract at a time until you build up your winning percentage on those. By that time, you don't need me anymore. You don't need me. Don't need me right now. Actually, have I told you anything you don't already know? How about that? Everything I've said, you already know. already in the course. I keep saying the same thing over and over and over again. I'm nothing fancy, and it just works. And by the time you're up to 4 commodities, you really won't need me. I'll be, a distant memory. Oh yeah, I remember this guy. He got me involved, but this is what I'm doing now, and this is okay. And by that time, you'll be seriously retired. And maybe you get your own little place down in Delaware or some other place that you're happy with. That's my place. Okay, I'm happy with my place. Some people like the golf courses. Some people like the woods. Some people like a lake. Okay, I'm happy on the bay side. You won't find me on the ocean side. Always gets washed away. At the bay side, nice. Get a little bit of grass there. I got rocks over there. The water generally stays on the other side of the rocks most of the time. Occasionally it comes up, but for the most part, it stays on their side. Nice and quiet. So you guys will eventually get to a place where you're happy with whatever is happy for you for your retirement. And you won't have to be worried about the numbers anymore. Because you can do this wherever you want. As long as you get an internet connection, you're good. You don't have to sit there for hours a day or some set time with other programs where you have to be there the first hour the market's open. Well, that's only halfway okay if you're on Eastern time zone. If you're Western or someplace else, that's ugly because you're up in the middle of the night for the first hour. And then you're day trading, basically. If you can't make a decision like this, at the end of the day, with no pressure at all, how the hell are you supposed to day trade? I mean, you gotta make decisions faster. Not good generally. Under pressure generally has mistakes. Here, you have plenty of time to think about it. And after you go through the back testing and the forward testing, is there anything to think about? Is it that simple? Where's the crossover? 2 out of 3 in my direction. Where's the swing high at? Now the bar count. Everybody happy? I'm getting nods all over the place here.
Yep.
I mean, you're sleeping or what? Everybody asleep already?
No, we're good. We're
That
good.
happens.
Very good.
All right.
All
You
right.
should be in good shape. I appreciate the time. I'm glad that you guys were here for this. And again, I've got calls scheduled with. Well, I don't have your call scheduled yet. It's early yet. You didn't do your homework yet. But I got 2 people on calls. I do some laser coaching with those folks, and they catch me during the week also. So this has been good. Anything else, give us a shout. But Karen's running the group, and she's doing a nice job of keeping things on track. I will pop in there occasionally and make sure nobody's going off the wall. But because I monitor everybody before they get in, I haven't noticed any idiots. You know how it goes. You get a group of people, and there's always one someplace. And I've been fortunate. I try and screen everybody out. And you had to go through a number of things in order to get to me on a phone call originally. And some of you were a little shaky. And I think most everybody's feeling okay at this point in time. But you didn't know what the hell happened on day number 1 with the first call. Who the hell is this guy? What the hell he's talking about? And now, you know where I am. I'm a little guinea kid from South Philly, Solden Gray. And I'm talking about the crossovers and 7 or 10 bars. That's it. Swing high and swing low. You wouldn't know what was going on day number 1, but 9, 10 weeks later, swing high and swing low. Crossovers. 7 or 10 bars. You know what's going on now. Now she's working out the mechanics and doing the back testing. All right, folks. This has been
All
fun.
righty.
Anything
right.
else?
Hey,
Thanks, Karen. She's running the group. She
Thank
knows
you.
what's going on.
Thank you.
And again,
thank you. Thank you, Dr. Fred.
Yeah.
very good.
Thank you.
Thanks, Dr. Fred.
All right. Good night now.